All right, welcome everybody to another weekly market review. Let's take a look at what happened in the markets for the past week. Okay, so before I get started, I just want to make a disclaimer. This is not financial advice. Any views, opinions, references, assertions, or other statements that I may set out in this social media or otherwise are my personal views and are not necessarily the views held by any group. Okay, so what happened in the week? Number one, Goldman Sachs is set to lay off up to another 3,200 employees. Okay, a warning sign that Wall Street is preparing for leaner times this year. So if you've been paying attention to my videos, I've been saying over and over again, things are not really looking too good with the markets right now, not looking too great with the economy. I really do strongly feel a recession is looming around the corner. We just do not know when it is going to happen. All right. So another major company, a major bank is laying off individuals. Okay. So about 6.5% of their workforce. And it also doesn't mean that they are done with the layoffs yet. The banking executives and even the other major banks like Wells Fargo and JP Morgan all want to see what happens in the first quarter, particularly whether the economy enters a recession. So stay tuned, guys, because it looks like this is just the beginning. We could be on our way to more layoffs and more companies laying off individuals in February or March. Okay, so again, isn't looking so great right now. Next one, Bed Bath & Beyond might not have much time left. So they have actually signaled to individuals before their earnings that went on this week that they are running out of cash and they are seeking bankruptcy protection. So they might be going bankrupt real soon and announcing that as well. So I brought this up because, again, Bed Bath & Beyond, one of the meme stocks from last year. If you guys have been following the Wall Street bet saga and how GameStop, took off in its massive price because of all the volatility and volume, Bed Bath & Beyond were one of these meme stocks as well and made a lot of people or a lot of individuals have quite significant returns if they were following their threads. So I just thought it was quite interesting to see this company is, seeking bankruptcy protection and has warned that they are running out of cash quickly. Sales has been dropping more than expected for this, and they are having issues with getting their merchandise on shelves. Okay, so not looking so great for Bed Bath & Beyond. Now, number three, the Federal Reserve is hearing from all sides of policymakers in its attempt to tame inflation. Okay, so if you know, the Federal Reserve and Jerome Powell have been raising interest rates, and this has been in an attempt to bring down inflation. Okay, so the critics of the central bank have said that they took too long to address this issue. All right, they should have done it sooner, and now prices have surged to one of the highest in the last 4 decades. Okay, now they are saying the Federal Reserve is doing too much to fix it by increasing the interest rates too fast, and they are putting the economy at a risk of recession. But Jerome Powell spoke this week on Tuesday, and he said that, the Federal Reserve is politically independent, and he's glad that it is. Okay, to quote his words, he said the absence of direct political control over our decisions allow us to take these necessary measures without considering short-term political factors. So he said this in remarks that were made by the Swedish Central Bank, right? So the Swedish Central Bank made some comments and remarks, and he said this in return to them. So the next rate hike setting is set to run around January 31st to February 1st. So let's stay tuned and see what happens when that meeting does happen. CPI data, all right? So I'll go through this in a bit, but CPI data actually came out and it showed that for the month of December, it actually declined, all right? It declined. Expectations was about minus 0.1%, and it declined the exact same amount, okay? Minus 0.1%. So what that means, guys, is that inflation is indeed taming and slowly coming down. But even though it has declined month to month, okay, it doesn't mean that the Federal Reserve is going to ease off their interest rate hike. they are still planning for some interest rate hikes, anywhere from about 5, or making interest rates go to about 5 to 5.25%, okay? Because inflation is still well above, okay, what we want it to be. Okay, so in a bit, I'll show you guys what the actual inflation is right now, and that they have a long way to go to meet this 2% target and mark that inflation is normally supposed to be at. Okay. Now, the last one is Tesla. So again, Tesla, stock that did massively well last year and for the past 2 years. They have cut prices for some of their vehicles, all right? Some of their vehicles, they've cut prices. And it isn't really great. So in the United States and in Europe, after wrapping up their fourth quarter, they reduced their prices. And they saw this because deliveries have fell before expectations, right? So their deliveries have fallen below expectations. And that is why they decided to cut some of their prices in hopes that they could have more orders for themselves. Okay, so Tesla has long been the top individual in the electric vehicle space, but its competition has been growing. Interest rates, okay, like I mentioned, Federal Reserve has been increasing this interest rate. This has also been passed on to the consumers, okay? So your mortgage loans, your car loans, right, your bank loans, all of these guys have gone up incredibly in a short period of time. And so financing new cars or even buying a new car has become expensive for consumers. So this cost has been passed over to them. And that is why you have so many individuals being unable to buy cars for that fact, because of the high car prices. Now, Tesla CEO Elon Musk has also been widely considered to have damaged the company's brand due to his behavior in his takeover of Twitter. All right. So due to his behavior and takeover of Twitter, it has not done so well. So because of this combination of factors, shares of Tesla are down massively and have fallen more than 60% in 2022. All right. Now, what announcements were made this week? So like I mentioned earlier, CPI data. I wanted to go through this data and show you guys how it actually affects the markets and economy. So we had CPI data released on Thursday, January 12th at about 9:30 p.m. Singapore time. So what was forecasted, if you can see, guys, is minus 0.1%, and the actual thing was in line with this. Okay, so what this shows is that inflation is actually taming down and it's slowly decreasing. But like I mentioned, the year-over-year inflation is still high, right? For the year, inflation rate is still at 6.50%, and typical inflation is at about 2 to 3%, right? About 2 to 3%. So we still have a long, long way to go until we bring this down to about 2 to 3% for ourselves. All right. So because of that, in order for us to bring this inflation down, we have got to bring up this inflation rate. All right. We have to increase this inflation. We have to increase the interest rate. All right. We have to increase the interest rate so that we can bring down the inflation even further. So what has the Federal Reserve said they are likely to increase this to? Well, from many of the analysts that I've spoken to and what the Federal Reserve are saying, we are looking at anywhere from 5 to maybe 5.25%. Again, do not quote me on this. This is just my assumption. You are looking at anywhere from 5 to 5.25%. That is where they are heading with the hiking of interest rates. So again, expect your bank loans to become more harder or expensive for you. Expect owning a car to become more expensive. Expect buying a house for yourself to be more expensive, because these loans and measures are going to become increasingly high. At the same time, your valuation of stocks, guys, your valuation of stocks will start to decrease as well, okay? So because these valuations of your stocks will decrease due to the high inflation or the high interest rate, you're going to see your stock prices definitely continue to fall. It's not looking too good for the stock market as well. All right. So let's go ahead and take a look at the charts right now. All right. So what's happening right now on the charts and in the market? So I'm taking a look at SPY S&P 500, ticker symbol SPY. You can see it on the top left-hand corner over here. And again, you can see my lovely trend line that I have drawn, my red color trend line. And as usual, prices right now are coming up to there and they might reject this point. Okay, so prices right now for the SPY, S&P 500 is up to around 398.50, right? Around 398. It likely might continue a little bit higher, okay, and hit my trend line. So where it is now is a really cool thing, guys. It is currently at my 200 EMA. So this green line that you see over here, guys, is my 200 EMA. Prices have actually hit my 200 EMA and are reaching my trend line. And traditionally, if you have seen in the past, guys, if you have seen in the past, wherever my 200 EMA and trend line is, that is where it has rejected the past two occasions. So what I'm expecting is that for prices to come up and hit my 200 EMA and my trend line, we may see it go a little bit above that, maybe anywhere in between 400 to 410, all right, anywhere between 400 to 410 before we see a reversal back down, all right, before we see a reversal back down and prices go back down as well. If I take a look at my RSI as well, I can see that for RSI as well, we are hitting a little bit of a resistance level too. So RSI does have resistance level as well. It is around the 62 to 65 area. Right now, we are at about 60. So a little bit more before a potential reversal for what's in stock. Okay. Bullish momentum on my MACD as well, but I foresee it going up a little bit more before it comes back down and we see a reversal. Okay. Now, on the QQQ, the NASDAQ 100, okay, QQQ, NASDAQ 100, typically as well, what I've seen, my 100 EMA, so this purple line that you can see here, guys, where I'm circling, this purple line has typically been my rejection level. I expect prices for NASDAQ as well to continue a little bit more upwards. It might hit 282, which is where my 100 EMA is. It might go a little bit above. So if I draw a line over here, right, if I draw a perfect line over here, we have sort of a resistance area around this point. Resistance area of about 292, all right? So 282 is the first one. If it does break above, I do see it going to around 292 before it gets rejected by this short-term resistance and then ends up coming back down, all right? So I'll just draw it a little more out. Oh, I'll just draw it a little more outward so you can see clearly. All right, so around the 292 to 293 area, that is my second resistance point. So first one at my 100 EMA 282 level, and then if it does go above around 292, my short-term resistance level, okay? And then at the same time, if it does go a little bit higher, you have another barrier, which is my 200 EMA. And if you can see for the NASDAQ 100, guys, my 200 EMA has been the strongest resistance level for the NASDAQ 100 as of this year, all right? So again, I'm not expecting stocks to be bullish and rally from here. I expect it to go up a little bit more before it reverses and starts coming back down. As I mentioned, interest rates are going to be kept hiking up. Stocks are not looking so good. More companies are laying off employees. It's really setting up to a very gloom environment, guys, a very gloom market outlook. So I'm not very optimistic about the midterm view or short-term view thus far. Okay, so these are the charts so far. Let's get into what events are going to be happening throughout this week. Okay, guys, so what to look out for in the upcoming week? So very simply, guys, okay, what we are having, firstly, PPI data is coming out, all right? PPI data is coming out. This is another measure of inflation, guys, all right? Is inflation coming down? Is inflation still sky high? What's happening with the forecast? So it's coming out on Wednesday, January 18 at 9:30 p.m. Singapore time. Again, for those of you that are trading the markets, right, or like my community here, we do trading for ourselves, day trading. This is a day that you want to take note of. you want to be careful of when you are doing your trading for yourself. Okay, so it'll be important to see how this event goes, how it signals with relation to inflation, and how it's going to affect the markets. Okay, now next one, what to look out for in the upcoming week? Another special event, unemployment claims. Okay, so unemployment claims, guys, what does it mean? Typically, what it signals is that the number of unemployed people who are seeking for insurance. So the number of unemployed people who are seeking for unemployment insurance. And right now, every time, whatever the analysts have been forecasting, they have been underperforming. It's been below that. Okay. So what this means, guys, is that even though we have companies slowly laying off individuals, interest rates are hiking, we have a pretty decent or healthy job market, all right? Not a lot of individuals are claiming unemployment insurance or making unemployment claims. So we have not reached that level yet where unemployment is at sky-high levels yet. And because of that, the market has not been reacting too drastically to it. But once that happens, then I think we can expect some shifts in the market. So I'm watching these guys every week, unemployment claims that get announced, until we see this, all right, exceed the forecast. Previous times, it has not exceeded the forecast. This coming week is 212K. Until we see this exceed the forecast, then we can see some differences and some acknowledgement that a recession is around the corner and that the economies are not looking too healthy. Okay, so this is the events that I'm looking for and paying close attention to in the upcoming week. All right. Now, for those of you guys who don't know, I post these weekly market reviews on Discord every single week. So if you're missing out on this vital information, guys, then I encourage you to highly join our Discord channel. At the same time, if you're looking to see how you can actually profit during these times, guys. So again, every week I share with you guys, the market situation isn't getting that great. It isn't getting better yet, but you can actually still stay profitable throughout these times. So if you want to know how you can still stay profitable, how you can make good returns for yourself, and like my community members making anywhere from $100 to 1K a day for themselves, then please go ahead and join our Discord. All right, please join our free Discord channel. The link is over here, bit.ly/IWC Discord. If not, the QR code is over here. Please go ahead and scan this for yourself. Okay, again, it is bit.ly/IWC Discord, and the QR code is over here. Please take out your handphone and scan the QR code. All right. So this is where I post weekly market reviews. I give you guys updates on how the markets are going. We also post the trades or the trade logs that we have taken and show you the successes that have happened throughout the week. So please go inside this Discord, guys. Some valuable information that is being shared for you guys. Okay. So that's it for myself. That's it for this week. I've come to the end for my market review. So have a safe trading week ahead, guys. Stay safe and take care. I'll see you soon next week.